Good morning, everyone. Thank you for joining us for PRI's webinar, Striking the Balance, Minimizing Fraud While Maximizing Profit. My name is Brett Rawls. I serve as PRI's Head of Client Engagement. I am just shy of 30 years in the banking industry, where I spent many of those years working in correspondent banking, leading teams. Literally, I've called on and worked with thousands of community banks in my time in banking and have enjoyed every minute of that. I also spent some time with a community bank that is now turned into a regional bank, but I served as their first chief administrative officer and chief experience officer. Also led teams on treasury management, SBA, as well as some other specialty banking type groups. Today, I am going to be joined by a couple of my PRI colleagues, Candace DeBarger and John Chappelle. Candace DeBarger serves as our Director of Payments. She has many, many years of quality banking experience, 4 years that she spent working with a regional bank. She also did 4 years with Fiserv, working in their card services group. But Candace, really 30 years of her experience with MasterCard, serving in all different areas, technology, operations, product and relationship management. So she brings a great wealth of information to the webinar today. She shared a fun fact with me. Her mother is 103 years old and lives with her. And she told me that the secret to her longevity is her nightly glass of scotch that she has. So life lesson there being also taught by Candace today. John Chappelle serves as one of PRI's consultants. John is a 20-year banker with both community and regional banks in the DC, Maryland, and Virginia market. He has been an executive in multiple different areas: treasury management, digital banking, IT, and alignment across all business banking lines. John shared with me he has two middle school aged boys. And recently, the three of them, he and his sons, built a fully functional battle bot and custom gaming PC for his sons. And it made me think that a fun fact on my end would be that I would need to drink an entire bottle of scotch just to have the courage to think that I was smart enough to do what John and his sons did in creating those things. And I would have a glass with Candace's mother also while doing that. So I really do appreciate Candace and John joining me. Today, we are going to focus on a battle that each of you, as well as all of your peer banks, grapple with daily, and that is, how do you stay vigilant in fighting fraud without creating unnecessary friction on your customers or limiting your growth and profitability? We're going to look at some industry data and studies that have shared some information on that. We're also going to talk about some of the common types of fraud that you're dealing with. And John and Candace will join me later, and we'll give some best practices that they, along with several of our consultants here at PRI, have seen to be effective in the marketplace in battling with fraud. We will have some Q&A at the end of this, so please take advantage of the Q&A function during the meeting and input any questions that you might have, and Candace and John will be joining me at the end to review those as well. All of this today is with the mindset that you can battle fraud without conceding profitability. Why does it matter? The balance. Well, looking at several different studies in preparing for today's webinar, one that jumped out at me that I think captured the conflict that you guys face in this balance was the Jack Henry 2025 benchmark study. This was 150 bank CEOs that were polled and asked several questions. The two that jumped out at me that I wanted to reference today as to why it matters were their top community bank priorities. You can see the ones listed there, all related to profitability and growth: deposits, efficiencies, growing the loan portfolio. But the conflict directly comes in where they listed their community bank leading concerns. You got a few of the usual suspects there: always margin compression, talent is top of mind. but their number two listed leading concern for 2025, as they've already told you what their top priorities were, biggest concern was fraud loss. So again, kind of emphasizes the point of why it's necessary that we strike a balance between the two. Another survey that I looked at was the Bank Director 2025 Risk Survey. Excellent. Sorry about that. We're on the wrong slide. Where the Bank Director listed their top risk and strategic challenges. This was 270 bank executives that provided feedback. This was just done in January of this year. And interesting, of all of the respondents, 85% of those polled represented banks that were less than $5 billion in assets. So largely a community bank survey on this. And you can see that they listed their top two challenges as cybersecurity and fraud. And overwhelmingly, I mean, in addition, ahead of things such as interest rate risk and credit risk. And I would suggest that a couple of the things on that second line are also indirectly and somewhat directly tied probably to cybersecurity and fraud when you look at compliance risk as well as operational risk, and definitely reputational. With cybersecurity, we know that it has fueled a considerable amount of fraud with security breaches and things like that. Account takeover has been a result of data breaches, identity theft. We also continue to see significant amount of phishing and social engineering attacks that are aimed not only at your customers, but also directly at the bank. You know that your employees constantly are under attack from phishing and social engineering. And then additionally, digital channels are being compromised much more frequently today with continued use of all the different options on the digital side. We're going to put up a poll, and I'd love to get some audience participation here. You'll see a poll pop up for you. We wanted to know what type of fraud has been most common at your institution. If you could take just a second and complete that for me. We've got a few listed there, and of course, if you don't see what has been most common in your institution, please take a second and fill out the other. Interested to see what everybody's responses are. I think we're getting, as it comes through, looks like what I expected. Card leading the way, just about 40% of those in attendance today. Check fraud in at 33%. See some more on the account takeover. Perhaps offline, would love to hear about some of the other things that you're seeing. But it looks like card and check, as we would have expected, leading the way on what has been most common. You can close out that poll if you'd like. The Bank Director survey asked the same question, asked their respondents what they were seeing from cybersecurity and fraud, what was most common in their institutions. And, you know, check fraud, overwhelmingly, I think it's pretty well documented that every institution at some point has dealt with some sort of check fraud. And we know that all different types and forms of check fraud that you're seeing. You've got check washing. We continue to see theft out of the mail system that has created an opportunity for the fraudsters to engage in check washing. Counterfeits are still a big piece of the check fraud. Altered checks, instead of washing all of the information on the check, they're just doing the dollar amount. And then with the increase in use of mobile deposit, significant amount of check fraud taking place through that manner as well. An area that we've seen some increases in used to be really just focused on wire fraud, but now business email compromise, where an email comes in with an invoice that's a fake invoice, but it's from a reputable vendor, somebody that you've worked with, and they get somebody to end up paying that. It turns out to be fraudulent. And we're seeing more business email compromise as well on the check fraud side. The second one that showed up in the bank director survey, 70% saying elderly and vulnerable exploitation. I think that's just more of a sad commentary on the state of the world, that there are bad actors out there who will continue to take advantage of people who are vulnerable. But I think most of you on the call today have seen an increase in these types of fraudulent activities, and so that's a bit concerning. We'll talk a little bit more about that as we go. Digital, probably the most common part on digital is account takeover, login credentials or access to someone's online banking, and has created fraud activities that way. Peer-to-peer, P2P is also increasing as the use of apps like Zelle, Venmo, Cash App continue to take on more activity. And then, not directly listed here, in your poll, you responded about 40%, which was the highest, that debit card is what you've seen the most. Debit card falls into several of these categories. So a significant amount of debit card fraud that we're seeing, whether it be through skimming, cloning, a lot of card not present transactions, seeing fraud these days, and as well as an increase in account takeover on the debit card side as well. So how does the fraud conversation impact profitability? And, you know, if you look at just the key drivers that we all, it's Banking 101, that we know lead to profitability with our banks, really matches the top priorities that I referenced in the Jack Henry survey on the first slide. But I want to talk about the calculated risk. That's probably the biggest piece, and a theme that will flow throughout, particularly as Candace and John come on and talk. You know, our industry, more than any other, is based on risk. Our risk appetite, how we address it and strategize risk, directly influences our level of profitability. And there are risks to profitability that come from lack of controls as well as over controls. If you look, just in the industry alone, every year we lose billions to fraud. And you would probably chalk a good bit of that up to lack of controls, or at least up to this point, that have been in place. And you all, you know, deal with financial loss at your own institution on a relative scale based on the types of controls that you may or may not have enacted. Also, we've got the reputational. Our customers, your customers, depend on you. They trust you to keep their data, to keep their assets, their money with your institution safe. And so anytime that you deal with a fraud activity, if God forbid something becomes public and people learn about it, or just in a community where word of mouth gets out that there has been some fraud issues with an institution, that can cause reputational risk. But there are also risks that are tied to what we'll call over controls. Overly rigid controls can hinder the customer experience, retention of customers, faith in customers using the services that you provided to them, and in a lot of ways can limit your potential to grow the customer base if you are difficult to do business with because of the level of controls that you put in place. It also can create inefficiencies in onboarding, customer service experiences and expectations that they have, but inefficiencies internally almost as much so. If you have over controls in place, you've got your staff focused on things and probably spending more time on research and investigations into things that likely may have been benefited by just having the right level of controls. In the bank director, they also asked those participants how they have addressed fraud to this point. And again, this was done in January of this year. What surprised me, if you can't read the left-hand side as well, what surprised me in the responses were really a lot less on technology and tools and solutions than I would have expected, because the main theme that came from these respondents was education and communication, and it was with employees as well as customers, and also a good number of folks have increased and continue to increase training for employees. But again, I expected to see a little bit more on the technology side, but the theme definitely was about educating and communicating better with your employees and your customers. So I'm going to take the low-hanging fruit on some best practices from a global perspective with dealing with this. But by saying low-hanging fruit, that does not always mean that it's the easiest to practice. In fact, all of these I think are very intentional and require you to really put some time and thought into doing it. But just, up top, make it part of the culture. Why is it important to understand how your bank is going to deal with and address fraud? Also, conversely, as we're talking about profitability, understand and have employees understand where you make your revenues and where the income comes from. I think that is a nice counter to the fraud discussion, with a mindset that your customers first, safety and soundness, and everybody understanding why the bank is aimed at profitable and strategic growth. With infrastructure, this is not a one department issue, and I think it's important that you break down the departmental silos when you're dealing with it. Some departments may have a little bit heavier lift in that operationally, but risk and compliance, your back office operations, as well as your frontline folks dealing with customers, all are involved in this. So it's important that everybody is fighting the same battle. Customer and employee education. Back to the survey results we just saw from the bank director, very, very important piece here. And I was just on a site visit a few weeks ago with one of our clients in Kentucky, visited branches in Kentucky and Tennessee. They did a phenomenal job. They had kiosks in each of their branches that had information literature on so many different types of fraud that their customers might encounter. They really provided it as an educational piece to define what it was, give them tips on how to recognize it, and then tips on what to do, including working with the bank should they encounter it. I mean, they had everything from romance scams, investment scams, grandkid scams, to your traditional ones that we're all aware of with check fraud, identity theft, and things like that. So it's very important. There are multiple ways that you can do this customer communication and education. I mentioned the in-person in the branch, but you can also put alerts on your website, on mobile apps. You can do email campaigns or even physical mail campaigns. But then you can partner with different community organizations and do events where the bank is proactively educating the community on the various levels of fraud that you're seeing, whether from a national or regional perspective. And this doesn't just take care of your existing clients. This is a great way to prospect and put your brand out into your community as a leader in fraud prevention and how much you care for your customers. Peer network and resources, things like today's webinar, talking with your peer bankers. The associations do a great job of pulling together educational things. I had a banker tell me the reason he loves working with his peers on this is because fraud is like a bad virus. It's going to spread to other banks. And so it's important that you guys fight this together. And then lastly, I use the word embrace. Maybe you could argue that's not the best word, but what I mean by that is never lose focus on this. We always talk about a marathon, not a sprint. Well, this is the marathon that likely never ends. It just becomes part of our business because the bad actors are going to remain out there. Just when we stop something, they create a new way to commit fraud. And so this is constantly evolving, and it's very important that culturally, like I said earlier, that you embrace that this will be just part of doing business going forward and fighting fraud. With that, I'm going to let Candace take control of the presentation and talk to us about the card side.
Thank you, Brett. And first, I wanted to say hi to all the customers out there for whom I'm doing projects. It's wonderful to see so many familiar names, maybe not faces, but names. And many of you to whom I've spoken and other clients who aren't on the call, one of the first things they say to me is, oh my gosh, my fraud is growing so much, or oh my gosh, my fraud is so high. And I respond, hopefully in a not snarky way, but hopefully, I respond, well, of course it is. Of course it's high. Fraud is a necessary evil. It's actually a good segue. Brett just referenced, right? Like, embrace it. These bad actors, which is a terrible term, but nonetheless, we all know what that means. They're not going away, and they can make all sorts of money doing this. So they're not going anywhere, and we're stuck with it because, and you may have heard, many of you have probably heard me say this already. What is the one way we can eliminate all fraud? By declining every transaction. And we don't want to do that because declining every transaction means eliminating your number one source of non-interest income. So dealing with fraud is that risk versus reward, walking that tightrope, of risk and reward and trying to find the right balance of each. So as your debit card volume is growing and your cardholders are spending more in more places, using their cards more often, which is what they do year in and year out, your fraud is going to go up. That is an unfortunate fact of our industry. What we want to watch out for is our fraud growing at a faster rate than our debit card spend. Then we can worry, and then we can start tightening those screws. But it's just important to not measure fraud as just a number, right? So, oh my gosh, I had $1 million in fraud losses. Well, if your cardholders spent $10 million more on their debit cards that month, that's not so bad, right? So we have to acknowledge that fraud is here to stay. And what we want to focus on, though, is minimizing fraud with customer satisfaction, which is my bottom note. Because every time a cardholder gets declined, it creates friction. And I think everyone knows consumers hate friction. Especially our younger ones, right? They want everything fast and easy. And what we saw when I was at MasterCard, there was a study that was done about what's called false positive declines. So what's a false positive? That means I'm at my computer trying to actually make a purchase, or I'm at the point of sale face to face, and my card is in my hot little hand and I'm trying to make a purchase, and I get declined for fraud. That is a false positive. 1 in every 4 consumers that receives that type of false positive decline puts your card back in their pocket, takes another one out, and doesn't take your card out again. So not only does it create a bad experience, it creates lost customers. And that means that their debit card revenue goes away. Probably they're going to whip out a credit card from one of your competitors or from one of the big guys. It also means, though, that you lose an opportunity to sell them more products from the bank, because an engaged debit card user is 7 times more likely to buy another product from you as one who does not use your debit card. So it's of utmost importance to make that balance of minimizing fraud, but yet, not declining transactions. Make that balance. And so how do we do that? It's easy for me to say, and it's easy for me to be a Monday morning quarterback. And I'm not going to tell you what rules to write, right? You all actually know that much better than I do, because every bank, your customers are unique. The fraud that's occurring in your local markets is incredibly unique. So the first thing you have to do is use your partners. And I'm sure all of you are. The first partner is your debit card processor. FIS, Fiserv, CSI, DCI, those types. They all know something about fraud. They're all pretty good at helping you to prevent fraud and minimize it and to deal with it after it happens. Many of those processors that I just mentioned have, I think they all call it the same thing. We learned that yesterday. Paris and Lisa and I, they all call it something advisors, right? Most of these processors have an advisor function as part of their fraud offering that allow you to talk with a dedicated or designated person every month, every quarter. With most of the larger processors, it's every month, and they review the rules with you, which is going to be one of my best practices shortly. If you can possibly afford it, do it. And as you're working with Paris on the PRI team to negotiate your EFT processing pricing, have her help you, because that's a really important service. And I know so many banks that have benefited from that. But your partners don't stop at your processor. There's also MasterCard and Visa, especially for the larger customers of you. And by larger, I mean those of you with those direct or principal member relationships with MasterCard and Visa. And I'll give you one example. Lisa Fisher and I had a customer in Indiana for whom we were doing projects, and they just started talking and expressing their frustration about their levels of fraud. And me saying, of course it's growing, probably wasn't the most sufficient answer, right? So we peeled that onion back and talked to them a little bit about what they were seeing. And Lisa was able to work with Visa to get the head of Visa's fraud team, this woman who is absolutely amazing. And they did like a little mini scan for the customer, and it didn't cost them money. And they found some amazing things. So we got their processor on the phone with Visa and the bank and us, and Visa went through all of the things that they had identified. And the bank was actually able to make some very good progress and reduce some of the fraud that they were seeing. So your partners just don't stop at your processor. Another thing that I often harp on and I see almost every month is something called friendly fraud. So friendly fraud is, I'll give you a terrible example that unfortunately happened to have been true several years ago. My son was an authorized user on my credit card, and he decided that he didn't want to spend his own money, and he decided to spend mine instead while he was in college. And that's friendly fraud. So it wasn't me using the card, but it was someone whom I know. I may not be happy about it, but still it was, someone to whom I had willingly given my card. When I see, and I saw this for one of our card partner clients, and card partner is where we actually track about 60 different metrics, debit card metrics every quarter for our customers. One of them is fraud, and we review every single fraud case every single quarter and sort of Monday morning quarterback all of those cases. I saw one last month for a customer who had, she and her husband, actually, I assume it was her husband, they had the same last name. They both had a $100 cash withdrawal at an ATM that they declared was fraud. Well, actually Brett referenced skimming. Skimming before EMV was a terrible problem, right? Skimming is when the magnetic stripe on the card is compromised through a fake reader attached to an ATM or sometimes a gas station pump. Skimming was a terrible problem, but guess what? EMV actually pretty much solved that, because there are now, with the chip, there are now security measures that prevent that sort of just skimming, just getting the mag stripe and getting a static value. There are dynamic values that change with every use of the card. So now if someone's card is actually physically at the ATM, which we can be very sure that it is, and someone knows the PIN, it's probably someone to either whom you've willingly given that information, someone known to you. So to write that off as fraud, it probably isn't appropriate. That's good relationship management, and doing it in the name of good customer service is fine. We want to retain our customers and make them happy, but I don't know that I'd include that in my fraud numbers for the month. The most important thing that I find most of our customers do not do is evaluating your fraud rules every month. So not only look back at your cases, but look back at your rules. Talk with your processor. Because what we don't want to have is a rule that's 6 months old that no longer is working and is no longer applicable. So I'll give an example. One of my customers during the Christmas time holiday, they had one merchant where they were a mainstream apparel, athleisure wear company. They were seeing a lot of fraud from that one merchant. So they shut it down. They did, one of those like take a sledgehammer approach to this, and they declined every transaction from that merchant, which for a very short period of time is understandable. 6 months later, that fraud rule was still in place. And now, there's no fraud happening there anymore. All we're creating is customer dissatisfaction. So one of the things you'll see when we go to the benchmarks is, I talked about false positives, looking at the false positive ratio of all of your fraud rules. So what does that mean? How many declines do we have to get to every one fraud? So, and again, Brent will go through the ratio, but I saw one rule, 99 declines to find one fraudulent transaction. That is not a very efficient rule. That is just a recipe for making your cardholders angry and having that attrition. So it's very important to look at every single fraud rule every month and making sure that it's still necessary. Then one last thing before I turn it over is, how do we measure our fraud team? So most fraud teams are measured by fraud losses, where either maybe a number like, $10,000 in fraud losses, or more appropriately, fraud losses as a percentage of total dollar volume of your debit card spend. And I understand that, but I think there's more that we could and should do. Because if the head of the fraud group is measured only on the levels of fraud, that person is not incented to balance approvals declines with fraud. So if we measure them also on approval rates or by program revenue, then they're incented to walk that line a little bit more carefully and not just tighten the screws and lock everything down and decline. That's not what we want to happen. And so this is something I think most banks or most of our customers don't do, and I'd encourage you to think about doing that. So John, you're going to take control. Thank you.
Great, thanks, Candace. And I echo the sentiment by Brett and Candace that it's great to see so many clients join us. And I really think that's a testament to really the threat that we see happen in all of our institutions today, that fraud is front of mind. And I think the attendance today really just shows that. So with that being said, we're going to transition now, talk a little bit about managing risk in different types of payment vehicles, primarily our digital, external fund transfer, and check delivery channels. So with that being said, I think it is always important to show, and both Brett and Candace hit on this, that fraud doesn't remain static. It is evolving. And our goal when we're trying to combat fraud is really to establish a comprehensive environment that meets today's challenges, but also is still remaining flexible enough that we can adapt in real time to what we see happening on the ground in our markets that we operate today. So, surprise to no one, that there is no silver bullet solution to combating fraud. What works for some institutions will not work primarily for your institution. So the best thing that we can do is to offer the payments and tools that our customers expect and demand from us, but let's focus on aligning our efforts and our resources where the risk meets the reward. We can't combat everything equally, so let's focus on what actually is a bigger opportunity for loss for both our customers and the bank alike. So one thing that we recommend is that the best strategy really focuses on building a blended layer defense. Well, technology, processes, and people work together to stay one step ahead of our bad actors. We don't have unlimited resources, so we need to ensure that we're leveraging our vendor partners and allowing them to help us bring enterprise level fraud prevention technologies to the table without the enterprise level expense for the bank. And one thing that we always have to be mindful of and keep front of mind is that we don't combat fraud in a vacuum. There's one key variable that as bankers that we need to consider, and that's the customer's role in fraud. So managing fraud is always a joint effort between customers of the bank and our staff. So it's always key, and we always focus on and want to promote fostering relationships that build timely communication and provide knowledge to the bank staffs that interface with these customers on known customer behaviors. We have to be able to identify when things don't look and feel correct, and then we can follow up with the customers as needed. So we also want to make sure that we're ensuring our customers have the right services, the proper access for their staff, the training they need, and really a clear understanding of what their responsibilities are in the processes for all of their different ways and they engage with the bank. And some of the, and the last bullet I have here really talks about fraud losses in the name of good customer service. Throughout my career, some of the most painful fraud losses I've seen with the biggest numbers usually happen in the name of good customer service. The true challenge we have in combating fraud is really managing that balance between providing excellent customer experience for our customers within a secure financial ecosystem that enables our customers to manage their daily banking needs independently. We don't want to have the bank involved and create added layers of friction in everything they need to do to combat their daily needs. And it's always good to remember that our main goal as bankers is to protect our customers' deposits. They trust us to handle their money, and we have an obligation to them to make sure we're doing everything we can to keep their funds safe. And we talked about the need for technology, processes, and people to combat fraud. And this slide really talks about some of the needs and expenses that we're going to have to invest in on both the institutional side as well as the customer-facing side. And then there's always that happy medium of where they kind of work together and bring the most benefit for both the bank and the clients alike. So when we look at the institutional technology risk solutions that we want to promote, this is when we talk about strong multi-factor authentication, making sure that we have the right technology that gives folks the ability to leverage multi-factor authentication, and then also have a strong technology that's helping us identify behavioral anomalies in our customers' banking activity. So we always want to make sure that we're monitoring transactional velocity, dollar amounts, frequency, cadence, but we're also monitoring different things that talk about geolocation, IP address anomalies, and really triggering some eyes on things that may not align with typical customer behaviors. We want to make sure that we're having solutions available for dual control and also tiered internal approval levels. We want to make sure that we have folks that have separation of duties in every aspect we do. We shouldn't have one key employee in the bank that can initiate, process, and approve large dollar external fund transfers moving from our clients' accounts. One thing that we've seen a growing interest in, and a lot of institutions really embark on, is dark web monitoring. If you really want to wow your customers, this is a tool that you can bring immense value to them. If you can place a proactive call to a business client and let them know that you've identified stolen checks that are for sale on the dark web and that you've proactively gone ahead and placed stop payments on those items, and then you want to talk to them more about ways they can protect themselves, that's going to separate you from the competition and really leave a memorable experience for that customer as they think about your bank. Of course, we're going to find ways to invest in employee training. We're going to enhance and test our incident response plans. We're going to make sure they have clear escalation paths with fraud. And then really want to make a culture where, it's okay to talk about fraud. And there shouldn't be any kind of fear from an employee to be branded as they made a mistake, or it's an okay thing to raise concerns when they occur to the right individuals to look at things fully and do the investigation as needed. We want to make sure we have strong customer contracts. We want to make sure that we're adhering to all of our institutional regulations, FFIEC guidance, NOTCHA rules and regulations, Fedwire, whatever the case may be. And we're going to couple that with our client-facing technology. So it's important to have robust treasury management suite of services that help our clients meet their needs and really manage that whole payments life cycle. How do our customers make their payments? How do they receive payments? How do they optimize their cash position on idle funds? And how do they mitigate risk? So a strong treasury management suite of services will hit all of those, and then also bring security and a little bit more protection as they're engaging in those high risk activities. The one thing we see that most banks have but do not utilize fully, it's real-time alerts. And the caveat to that is the real-time alert is great, but you want to make sure it has actionable triggers for the client to respond to fraud. If they get the alert and it's too cumbersome for them to act upon it, is the alert really giving that benefit that it could be giving in real time? We want to make sure that the bank has proper limits in place that are measurable to the amount of risk with whatever transaction they're trying to complete. You don't need to have too restrictive of limits in place for low risk activity. We want to have an escalating risk profile that meets the risk associated with whatever transaction they're trying to complete. We want to be able to offer tools that the customer has a fair level of customization, that they can enable features and tighten down security with what meets their needs. And this is when you have solutions such as dual control, restricted hours of accessibility to online banking for some low-level employees. There may not be a need for an AP clerk to have access to online banking at midnight. Let's make it so they can only access the online banking portal during business hours if their job requires that. And really the accessibility for sub-users to have omnichannel decisioning. It's not reasonable to expect our customers to always be in front of a computer when fraud occurs. So let's give them the solutions and the tools they need to make real-time decisions wherever they may be. And then also you want to make sure that you're keeping a thumb on the pulse of what's important to your customers. You want to meet them where they're at. Brett referenced P2P on the consumer side. There's all kinds of different solutions in place on the commercial side. We want to make sure that we have the solutions to where they are today, but also keeping an eye out into the future to find out what emerging trends and what solutions are they going to be looking for as we move forward. And one thing to keep in mind when you're building customer-facing solutions is that timing is everything. Our customers want everything as soon as possible, and they're willing to pay for that. Expediency matters. And when I say they're willing to pay for it, it's both financial and with their activity level. So as we have increasing restrictions and qualifications to do things in a more timely fashion, our customers are more receptive to taking those extra steps and complying with the security controls to ensure their payments go out in an expedited manner. And then we're going to talk about processes. The first thing to always make sure of is that whatever processes you have in place at your institution, they need to be comprehensive. They need to have the coverage to address the concerns that you have. They have to be repeatable, and they also have to be scalable to grow with your bank and grow with the level of risk you received. Oftentimes we walk into institutions where we see they may have a great fraud program, but they could have triggers and alerts that are drowning their staff. They're getting 2,000 to 3,000 alerts a day, and they have 2 individuals accountable to working those alerts. If you're having that much activity, the quality of the research is minimal. You can't physically get through them all. So you want to spend the time to put the solutions in place, but then also fine tune them that the alerts that you're getting are meaningful and they're actually manageable, that can be worked on. You have the time to do the research, complete the outreach to the customer as needed, and really follow through on that quality alert you're getting, and not just having alerts for the sake of saying you have alerts and you're managing them. One thing that also is important here, we can't stress it enough, is to have timely return processing and activity review thresholds. If you don't have the time to review and process the transactions coming through your bank, they can't afford to wait till tomorrow. So we need to make sure that we have the staff and the support in place to handle everything in a timely fashion, because if you wait too long, you're going to miss the opportunity to possibly recover any potentially fraudulent transaction losses and really just compound a problem that's already existing. And our final slide here is we'll talk about really just the value exchange in managing fraud in the payments ecosystem. And it's important to realize that you should always be adding value to clients. If clients will meet you halfway and they will do the legwork needed to have a secure environment if it feels like they're adding value. So really the one thing that I'll emphasize is really the media and just where we're at as a society today has helped a lot to raise the awareness on the need for fraud solutions. It wasn't that long ago that, check fraud and things like that, while they occurred, it was always somebody else's problem until it was yours. Those days have kind of gone away. I think every business owner, every consumer has either been a victim themselves of check fraud or they know somebody that has. And they've seen the pain that causes and the time lost with having to combat that fraud. So it is also important to make sure that, our customers are expecting us as partners to be the partner and bring the solutions to kind of manage that, to prevent the, unforeseen events, the frustration, the time lost. And they're willing to put forward the effort to ensure that they don't have to deal with the consequences down the road. And then really the customers expect the bank to be at the forefront of fraud. And this does come in as an expense to the bank. So we need to be mindful of that. We need to track our expenses. We need to find out the true cost of fraud, not just, oh, we had a fraud loss of XYZ, but where does that fall in the whole life cycle of that service? Candace talked about that with fraud being inevitable on the debit side. You're going to have fraud, but the benefit of added activity is going to offset that. And that's the same here. So we want to make sure that whatever solutions we're putting in there, we're covering the costs, we're charging customers appropriately. And sometimes it's key to be mindful of the fact that you don't need to cover the cost of every expected loss. Say with wire transfers, for example, you could have some significant losses into the 6 figures, 7 figures that can happen in one event. But the bank doesn't need to be accountable to cover all of that loss up front when you're building out your program. You have insurance in place. Let's make sure that our insurance premiums are where they need to be and that we have enough value in how we're charging for these services to cover that expense as well. And then also making sure that we have the training for our staff, that whatever our insurance for fraud losses requires the bank to do, that we're ensuring we're doing that day in and day out. The insurance companies aren't in the business of paying claims if they don't have to, so they will look for every loophole they can to get out of having to pay for coverage in the event of a fraud loss. So it's imperative that we have all of our employees doing things the right way each and every time, and that we have a culture that really enforces the accountability to that. And that starts with senior management all the way down. We need to make sure that we have strong authentication and verification procedures in place. Our employees know why we have those in place, and they're following through it. We need to hold folks accountable to do that. If we have a couple people getting loose, it only takes one slip up to have a pretty monumental loss potential for the bank and our customers alike. So we also want to make sure that we're tracking the expense and we're keeping tabs on not just the revenue that we bring in from fraud prevention services, but what is the potential for frauds that we mitigated? What are the true losses that still exist? And we're keeping that balance between profitability and expense really at the forefront and looking at it at a set recurring cadence. And with that being said, I'm going to pass it back to Brett.
All right. Thank you, John and Candace before that. Some great insights. John and Candace will both be back with me in just a few minutes for the Q&A wrap up. But I'm going to do another poll question. So we're gonna pull up a poll, and if everybody could just take a second to answer that. This is a yes, no. And essentially, have you implemented AI, so artificial intelligence or machine learning tools to offset fraud attempts at your institution? If you could take just a second to give us an answer on that. Okay. Looks like we've responses are coming in a little bit swayed to the no. I'll let folks continue putting that in. So not on the slide here, but I wanted to talk about another study that I was looking at. It was the CSI banking priorities for 2025. They had an entire section dedicated to AI and fraud readiness, and some stats that they put in that I thought were just really interesting. That they put in that I thought were really interesting. 33%. So CSI, core processor, lots of clients, obviously in the Southeast and around the country. Their respondents responded 33% ranked AI and machine learning as the most impactful tech trend for 2025. Another 17%, so a low number, identified real-time fraud detection as a top priority. But the reason I asked the poll question, and again, it came in somewhere in the mid 60s to mid 30s range of no on implementing AI tools and machine learning tools to this point, 91% of their respondents expressed an interest in deploying AI-powered tools for fraud detection in 2025. So a lot of folks intended on doing this or have an interest in doing it, but I thought it was interesting that, on a smaller scale, our poll showed that generally, though, a lot of banks still have not done this. And I think that's understandable as we talk through some of the best practice on tools and solutions. Candace and John both in their presentation shared some quality solutions and services that are provided by vendors and by processors and the networks. But I'm going to make a general point here. All of the cores have developed fraud mitigation tools, or they've partnered with a preferred source. All of these tools are still evolving because fraud, as we've already discussed, it's still evolving. I guess my comment here would be don't take the easy route. If something is already included in a platform or a core that you've got, take your time. This is a financial and risk-based decision that is really it's to your bank's risk appetite and the way that you want to mitigate fraud. Be picky, be agile in your approach to this. You don't want to pay for or buy something that may not fit what the long-term needs are in battling this. So that would be my comment there. Along those lines, you can ask for or demand proof of concept, particularly in the negotiating stages. There are a lot of vendors out there providing solutions for fraud mitigation, detection, prevention, and you can, on the front end, ask for some proof of concept here. I think that is at least something worth putting some of these vendors to the test on. We talked about cross-industry collaboration or peer network earlier in a different context. This next one, there are a lot of the vendors. John mentioned dark web that is available out there. There are vendors that provide solutions that involve consortiums and data sharing. As they continue to expand and take on more of the market share and bring on more financial institutions, there is more data available now between institutions. There's a lot of value in that. So as you are looking at potential vendors and resources for this, I would say take a close look at those that provide consortiums and different data sharing. And then lastly, John said it, I'll reiterate it. There is no silver bullet. I think that that's okay because fraud's going to continue to change on us, and there may be multiple different tools and ways to deal with it. In fact, we've already talked about several types that you're engaged with. There might be a different tool for check fraud than there is for card fraud, and so forth, with the various attempts that those bad actors. I know Candace doesn't like that term, but they are bad. We'll keep it at that. That they bring at us. I love that Candace referenced revenue and approval rate. So she was talking about how folks measure their fraud efforts. A few helpful benchmarks. If you've seen PRI speak before, we always try to leave you with a few things that can be helpful. If you were to Google and look up these benchmarks for an industry, you might not see the same numbers that I'm going to mention here because we focus entirely on community banks. That's who we work with. So our data and our experience comes from what community banks deal with. When you look at industry data overall, you'll probably get some mixed numbers because of the large banks and the influence that they have on some of those things. But just in looking at a few benchmarks that might be helpful here, fraud loss rate, the percentage of revenue that's lost to fraud. Candace referenced it. We can look at revenue gleaned from debit card activity on an income statement. You can also look at what fraud loss is tied to that. And we generally see as appropriate in that range is 5 to 8 basis points. Again, you can eliminate fraud completely, but you will eliminate revenue if you go to extreme measures. So we think on the debit card side, somewhere in the 5 to 8 basis points would be an appropriate number on fraud loss rate. Fraud detection rate, that's the percentage of fraudulent activity that a bank identifies and they stop before incurring losses. This is a great measurement to tell you how well those prevention tools that you may have put in place or the processes, how well those things are working. Generally, we see acceptable is anything above 85%. Some of the higher performing banks in this category would be in the greater than 90% range. I spoke with a couple of our clients a few weeks ago, and knowing that one had just implemented a rather well-known third-party vendor that has fraud prevention and detection, as well as another bank that had just utilized several pieces from their core provider, and both of those were tracking at over 90% on fraud detection rate. They felt really good about the investment that they had put in place with those tools. The next one, back to harp on something Candace said, with transaction approval rate, this is the percentage of legitimate transactions that are approved without being flagged or blocked. So this is important. This is a great measure, really, of overall customer experience and operational efficiency. A higher number here means that your ops teams and fraud teams are not having to deal with things that were legitimate transactions but had been flagged incorrectly. We see, again, on the debit card side here, greater than 90% would be a target number there. And then finally, just to close out, Candace mentioned the false positives, so kind of the flip of that transaction approval rate. False positives, that percentage of legitimate transactions that are incorrectly flagged as fraudulent. This would not be a good thing to have a higher ratio here. Generally, and it depends on the size of the institution and the transaction volume, but on the debit card side, we see acceptable anywhere a ratio from 5-to-1 to 8-to-1 on that. So again, hopefully some data that will be helpful to you to take back from this as far as benchmarks go. There is not one formula to beat fraud. All of these play their own role and give you different information. And again, it depends on your perspective and strategy on how to place an emphasis on battling fraud in your institution. With that, I'm going to go. We've got a few minutes for some Q&A, and I appreciate everybody has been putting in information here as we've gone through. I've got a couple of questions. I'll start with John. I'm going to ask this of you. What advice would you give to leadership teams that are trying to build a stronger culture of fraud awareness? Oh, I think you're muted, John. Sorry about that.
Thanks, Brett. It was a perfect answer before I noticed I was on mute. It was really flowing off the tongue so well. But the first thing I'll say is that a tone from the top does matter. The senior management team has to be enthusiastic and really mean what they're saying when it comes to fraud, and they have to display it. The teams will know when it's just lip service. So that can be accomplished through, promoting it at every company meeting, every vocal forum you have, and then also participation. Sit into the fraud trainings with them, be an active participant. The second one is to really just emphasize what Brett said earlier, that fraud management is everyone's job. Of course, we have fraud departments, fraud specialists, but everyone in the bank can always be mindful of what's going on with their customers' behavior and raise the flag when they have concerns. And then in that same vein, it's really just making sure that the bank has a known escalation process for fraud, and that they embrace a no blame policy. Folks have to be comfortable to speak up when things don't look right. Even if there was a mistake made by the employee, they have to have that freedom to make a mistake and share what's going on so we can be proactive and combat the fraud early. Those are the biggest things, but really starting with that tone from the top, I would emphasize enough.
All right. Thanks, John. Candace was going to ask you a question on Reg E. Reg E applies only to consumers. Can I decline claims from small business debit card holders?
Well, the easy answer is no. I actually had a customer who did that. Their compliance team, which is unusual, said, well, it doesn't apply. That means we can turn down every claim made by a small business debit card holder. But compliance isn't only with federal regulation and state, it's also with MasterCard and Visa. And both MasterCard and Visa have rules in their operating rules that require zero liability, not only for consumers, but also for small businesses. So MasterCard and Visa require that you honor those claims and process those claims.
Okay, thank you. I think we have time for one more question. And so I'll throw this out maybe to both of you. What are some examples of dark web monitoring, and is that a vendor supplied service? Candace, I'll start with you.
Sure. And I will admit, like, my background is MasterCard, so I bet Visa has the same product, but I know that MasterCard has a service that will identify PANs, card numbers that are out on the dark web, available for compromise and use online. And of course, for a fee, and MasterCard's fees are never low, but for a fee, they will identify those cards to you so that you can, take action. I'm sure Visa has a similar product, and it would not surprise me if several of the processors, particularly the more sophisticated ones, did that as well.
Okay.
Yeah, and very true on the core side as well. Most of the major cores now are being more active in this space. They have vendors that they partner with to offer this. There's a slew of them out there. You could easily find one that meets your needs and your scale. It will run the gamut. You could pay a fortune to get a very high enterprise level, or you can kind of zero that in to really what you're focused on. But I would start with your core, but then do some independent investigation as well to find a solution that meets your needs.
Okay. All right. Well, thank you both, John and Candace, for joining us today on the webinar, for all of your help, but especially thank you to all of the attendees. Those of you that are existing PRI clients, we really appreciate your business. And those of you that aren't, hopefully we'll get a chance to speak with you, whether it's about information that you learned here on the webinar, or any questions that you have, or anything else that we can help you with. I did want to let everybody know we will be sending out a copy of the slides from today's event, as well as an audio recording. So be looking for that coming soon. And then lastly, we hope that you can join us for our next webinar on Thursday, November the 13th. Candace will be with us again, along with Mike Holt, one of our partners. We'll be talking about the new payments playbook, cards, customers, and what's next for a community bank. So some information on that if you scan the QR code. And again, also we'll be sending out this information. So again, thank you everyone for your time today. And if you've got any questions as a follow-up to this, please let us know and we will get back to you as soon as possible. Thanks again. Have a great day.